Guys, what's up? Welcome to this channel. I get so excited whenever I want to talk about psychology. Okay, in this video I'm going to be working on how to understand what psychology is all about in the market. Now, why do I say I get excited? Because I was actually good on technical analysis, but the aspect of my psychology and psychological aspect of it was actually on the what downside. Now, one of the things that we need to understand about the forex market is this: we actually use our minds to trade. Okay, what we're using is our mind, and how strong and effective your mind is will determine how profitable you become in the market. Because why? If your mind is not well structured, by psychology, having the right psychological mindset, you are actually going to be what? Losing out on the long run. And it might even get up to 4 5 years and you're still struggling. Because why? The last part of the whole thing after technical analysis is psychology. Now you might be asking yourself a question: why did I decide to bring out technical analysis and psychological analysis, leaving out and technical analysis, since that's what beginners are all about? Well, I want beginners to begin to understand from the scratch how their mind works. Okay, this will enable them to be able to what, have a better advantage to knowing what they're doing in what the market. Now, if you're right in this video and this is the first time of you watching this YouTube channel, I would like you to subscribe and what, give a thumbs up, and also leave a comment in the section below of what is your greatest challenge in the market. Okay, what's the greatest challenge? So let's know how we can tackle it out. Now, moving on towards psychology. Now let's understand what psychology is all about. Psychology is actually the study of the mind, how the mind works. Now, I will equally say this: how best you know yourself is actually traceable to what how you're able to control your emotions. Now, when you say psychology and you say mindset, the next thing that comes into my mind is emotions. Now, what do we mean by emotions? Emotions has to do with fear, greed, shame, anger, and the rest of them. Now, for forex trading, they are based off of those three that actually works in the market. I'm going to be explaining them. Okay, just stick with me to the end of this video. I will show you how your mind plays out. Okay, how this thing comes into play, how when the fear comes in, when the greed comes in. I want you to stick to the end. Okay, I'm going to be showing you gradually on the step-by-step guide. Just stick with me to the end. Also, don't forget to subscribe like I said. Okay, now when I said fear, greed, and anger, these are the three things that comes up to play in the market. Now, what do we mean fear? Now, fear is actually two areas. One, fear of losing your money, one, and the second one is fear of missing out, FOMO. Now, this fear of missing out is what really affects beginners traders. Now, it really affects beginners traders that when they are not able to what pinpoint how this thing happened, you'll find out that you are entering a trade without even calculating, without even knowing if the market is actually on the bullish side or the bearish. You just saw a candle moving down and you're like, let me get involved. The thing is this: you have to be able to pinpoint when the psychological aspect of it is what is in place. When your emotions are what getting the better part of you, you should know when to what avoid and control what it. Now, the next one is greed. Now, greed. Greed is wanting to take too much money, more than I was expected. Okay, you said they're going to be getting $50 in that day, or let's say $5,000 in a day, and you decided to trade above that. You've already gotten $5,000, but you're like, I think this is a Christmas day, so I should look for a way to get more money. But let me say this clearly. You have to understand something, that there is nothing called like a Christmas day. So every trader has their own day that they become profitable in the market over time. But you need to understand when your day is. Your day is not actually going to be coming, but you have to be able to understand that discipline is a key role of the whole thing. What happens if your day comes up to play and you eventually lose the whole money the next day? Discipline has not been put in place. That's the cause of the problem. I've seen cases, even me myself has actually experienced it, or you make money in the market and the next day you're losing out the money. What was it? What was the problem? Discipline plays a vital role. Now let's talk about the next one, about greed. Greed is also actually it comes up in form of over trading. Now let's say, for an example, you place a trade, the market move in your favor, you sort of you to close for that day. You later say you want to visit the market again, and you come back later and you're like, okay, let me risk, and you eventually lose the money you made for that day, and you actually lose the one you made off of what the previous day. That is where greed comes up to play. Ability to be able to understand how this thing plays out is actually what giving you what a better advantage. The next one is anger. Now, anger comes up into play when you lose out money and you be like, oh my god, I just lost the money, so what should I do? I think I'm going to be revenge trade. I'm going to be looking for an opportunity to what to get my money back. What kind of a nonsense is this? How can the market go against me? And all of this stuff playing out is actually you what getting angry with the market. And whilst you should be angry with yourself. Now let me say something before I dive into telling you how to what manage these emotions and when they come into play. Now the first thing you need to be aware of is this: instead of blaming the market, why not blame yourself? Now, I'll tell you why. As a beginner, I used to hear my mentor say, it is good for you to always blame yourself. And I was like, he said the market is always right. Now I was like, what kind of crazy stuff is that when the market is going against me? I think the market is wrong. So I fought with that until after some time, several knowledge of getting knowledge from books and all of that. So I got to find out that I was the cause of the problem. Now, what do I mean I was the cause? I'm the one that choose what to risk. Okay, so if I'm risking high, the market didn't tell me to risk high. I'm in control of my risk. So how come I'm blaming the market? That's one. The next one is I can change myself, but I can actually change the market. Don't forget, if you are on the trade, the market keeps flowing. If you're out of the trade, the market keeps moving. So the market is a continuous process that moves for 24 hours. So it is better for you to be able to what? Control yourself up to a level that you know how to manage your risk and manage yourself. Okay, and focus on you. Why do I say focus on you? The market will always be the market, it will always keep moving. Okay, it will keep flowing, but the something that you need to know is you have to control yourself, in the sense that you need to be able to manage yourself. If you're able to manage yourself effectively, know when to get in, when to get out, and all your strategy put in place about your own psychology, you are good. Now let me quickly erase this psychology from your mind. Coming to the market every day does not mean you will live out with profit. I'll say it again. Come to the market every day is a wrong psychology that I'm going to be making that money today. That's wrong. You should come with a learning mindset to be able to see a new thing that you will learn out from the market. Once you see a new thing, that new thing is able to give you potential wins in the future. Okay, you should have that mindset that okay, hey, I'm coming to this market today, I'm going to be looking for an opportunity, and if I don't find any, fine, I'm cool with it. I don't come with the mindset that I'm going to make money. That's the wrong mindset. You know why? I will tell you why. When the day is about, let's say, you're about closing for that day. If you have a trading day, a trading time, and you're about closing, you find out that the market hasn't given you any good entry. You force yourself in because why? You already told yourself that you're going to be getting money before you get out of that day. So your psychology has already been formed and built in that way. So the mind will be like, that was one of the things I was really struggling with. I'll be like, today I'm going to be making $50. If I make $50 today, the next day I'll blow it out. Now, this is what I do. I make $50 today, the next day I'm going to trade. I'm like, tomorrow I'm going to be getting 50. That 50 plus 50 is $100. Then I'm cool with it. So I get involved in the chart, and what happened? I blow it out. Why do I blow it out? Because most of the time I got to find out that I enter the market and I'm always looking at the time. Hey, time is going. Time is going. Come on, give me what I want. My psychology has actually been built in that what direction. That becomes a problem. It becomes a problem that I have to do what I'm not supposed to do. I have to do what I'm not supposed to do because why? I've already built up my psychology in that aspect. So now let's dive right into understanding how the market, how your emotions come into play and how to control them. Now take note of this. That three that I said: one, fear; two, greed; the third one is anger. Now these three emotions are what controls humans. Now you cannot actually eliminate them completely away from your life, okay? But you can control them. You can control them. You cannot what actually what erase them completely from your life, but you can control them. Okay, now let's dive right in. Now let's start with the first one. Like I said, fear. Now the first one is fear of losing money. Fear of losing money. Now, how do we control this? Now, this is what I do. I will use myself as a case story. Okay, whenever I want to come into the market in a day, I will tell myself and ask myself a question like, how much am I willing to lose that day? Now it sounds crazy, right? How can I be like, I want to start the day and I be like, how much am I willing to lose? Now this will inform my psychology, telling me that hey, I've already told myself that I'm going to be losing certain amount of money. Okay, this is where risk management come into play. I discovered that risk is tied to emotion. So if you're able to balance your risk, you're good in the trade. Okay, so what do? I tell myself, how much am I willing to lose? Okay, I'm willing to lose on $200, $300, fine. So now the next question is, how much am I going to be risking in a trade? Okay, if I'm going to be risking $300 in a trade, that means definitely I'm going to be risking $50 per trade, and I don't trade more than two, three markets. So how do I split this up? I'll say, okay, fine. We can trade two markets, right? Okay, let's split it up and say I'm 150 in a trade, 150 in another trade. But if the pips is actually 20 pips and stop loss, what I'm going to be doing is I'll risk 50 or 100. Yeah, I'll risk 100. That's cool with it. I can put it on 20. The next one I'm going to be trading. If that fails, now there's something you need to be aware of. If a trade fails out, please reduce your lot size. If you place a trade and the market does not go in your favor but hits your SL, please reduce your lot size. You know why? You're trying to manage your psychology. I told myself time ago, long time ago, that I when I come into the market, I come with myself. When I'm living with myself. So what I should do is I should try and please myself to the best of my ability, not the market, because I'm the one doing the analysis, I'm the one doing the trading. So if I mess with my mental capacity, something is wrong. I'm going to be what? My mind will be like, hey, are you sure you can do this thing? Are you sure this is meant for you? Are you sure? All this kind of unnecessary questions. So I try to manage my psychology. I try to manage my cycle because that's my biggest what tools in the market. Forget about the trend line analysis and all of that. That's the biggest tool. Your mind. If your mind is balanced and matured, of course you're cool in the market what to trade. Now the next one that I said, you have to be able to what, know how to manage your risk. Manage your risk. Fear of losing out money. So what you should do is plan your trade and trade your plan. Yeah, like one of the examples that I got some time ago, I said I was going to be risking 3% of my total equity for that day. Total, for those that don't understand equity has to do with similarly to balance. Yeah, kind of like, so I was a total 3% of my balance, let's put it that way, that day. So what I do is I risk. Before risking, I ask myself, if I'm risking 3%, that means I'm risking 1% of what in a trade. So if that one fails, what I'm going to be doing, instead of risking 2% and another 1% again, I reduce it to 0.5%. Okay, it's not a gambling thing, so I need to be what manage conservative about my risk. Now the next one, let's move on. It's I said the first one is fear of losing out money. The next one is what, fear of missing out, FOMO. Now this is where your mind needs to be what, really understand you. Now this is what I tell myself: the market will always come to you. Wait for it. This is like you buying, a buyer and a seller, and you own a shop, and someone comes to you and be like, I want to buy stuff, and you be like, okay, what do you want to buy? This is it. And the person be like, will you sell it for the price? And you be like, no, I'm selling it for the price. Then you say, okay, no, I'm not buying this price. This is it. And then finally you guys actually come to a conclusion. That's the way the market is. You are like, I'm buying at this price. The market says, no, some foods are going to be buying here and some folks are buying them. You stand on your ground and be like, hey, I'm buying here. If you refuse to come, fine. Stay there. Let the opportunity go. Fine. There are lots of opportunities that are going to be showing up at the end of the day. So what you should do is stick to the one that you know. Okay? Stick to the one that you know. Fear of missing out. You have to understand that the market will come to you. Build your psychology to a weight and said, okay, I'm going to be standing my ground. Even if it does not come to me for that day, it will definitely come later. There are lots of opportunities in the future tomorrow. I don't have to force myself and go against my will. I discovered something that I put a setup somewhere while I was trading my first 3 weeks of trading. I put a setup somewhere for the market to come to me. After some time, the market does not come there. I will just jump in. I say, okay, maybe it doesn't want to come here. Let me just enter. And after all, I got to find out the market came actually to that zone again, and I'm lost out. I'm stopped out. Okay, what's the cause of this? This is because of fear of missing out. I'm afraid that I might miss the move. There is nothing like fear. You don't need fear. What you should be afraid of is even losing your money, not even fear of missing out. If the market does not come to you, your capital is still there. Your money is still saved up. Okay. Now, the next one we are going to be talking about is greed. Now, greed. How does greed come into play? I tell myself is there's something I want to say before I start talking about greed. Please, for me, I think I don't tell myself how much I'm willing to make in a day. Why do I do that? I try to put everything under, how would I put it, under not probabilities now, but I like to put everything like, let me not be under pressure. If I tell myself I'm willing to lose 100 to make this amount of money or a specific amount of money in that trading day, what I'm going to be doing is that I'm going to be fighting out to get set up. So instead of telling myself and putting myself under that pressure, I don't tell myself how much I will need to win. I'll be like, how much am I willing to lose? But I don't calculate how much am I willing to get. You know why? I'll tell you a secret. The secret is this: I focus on what I'm able to control. I can't control the market, but I can control how much I risk. I can't control the market, but I can control what I trade. I can't control the market, but I focus on what I can control, and that is my belief. If the market does not act according to my belief, it's its own. I stick to what I believe. This is what I know. I'm going to be staying with it. Okay. The market might try to convince you or confuse you at some time that you don't really, are you sure this is the thing that you know is good? Still standing by what you know. If it doesn't play out, fine, you learn from it. That's it. Okay. So we talked about greed. Now, greed comes up is in a place whereby, let's say you place a trade and you be like, the market has moved in your favor, and you are like, instead of you closing partials or taking out part profit. Now, partials, for those beginners that don't understand what partials is, when the market, I target 50 pips and the market gets to 30 pips, I can decide to close half of my profit and protect my trade. What does protecting trade mean? Moving my stop loss from where I entered the market, where I placed it, to where I entered the market. I do that a lot of time. That protects my capital for me. I take 5 times or 30 times my profit and allow the rest to ride. That allows my emotion, my psychology to be balanced. These guys, this is it. Psychology is the main deal in forex. Check out when the market is moving in your favor, you're always like, what if this market reverse? Of course, it's like that. Yeah. What I do is when I get 5 times my profit, my risk rather, I try to break even. Break even means taking part of the profit. When I take part of the profit, I allow the other one to run. Take for example, I'm opening a standard lots of 1.0 and the market moves to 50 pip. That is, and let's say I'm opening a, oh yeah, 1.0 and I'm having 5 times. What I do, I break 99. That is what I do, 99. I'm cool with 50 pips. 5 times your risk, that's cool. Some day 10 times, that's cool, depending on you, but I'm always cool with 5 times. Okay, because I believe I will come back tomorrow to trade. I don't like being burnt out, like watching the chart for the whole day. I just see opportunity and I trade. I'm cool with it. Okay, so the next one I want to be talking about is greed comes out in two places, like I said, when the market moves in your favor and you're like, mm, let me open more positions. That's crazy. That's greed. Okay, that's great. And the next one is when the market go against you the previous day and you come to trade the next day, you want to make more money and open more position to cover up for the loss of yesterday. Hey, that is disastrous. Yeah, that is dangerous. So I advise stay away from such stuff. They don't help you. One of the things with forex is you have to be sincere with yourself. What you're doing, is it good? Is it right? Will it help you grow? Can you do it in a real account if you're trading a demo account? Even if you're trading the real account, would this thing make you profit over time? If it wouldn't, then there's no need sticking to it. I know for sure if I open a position, even if that analysis is correct, and I open more positions and I try to get greedy, the market reverses against me eventually, even if it is right. It has happened to me a lot of times. So I was like, I think I need to start telling myself the truth. The truth is, I just want to make what I have to make for that day. Okay, I just have to make what I have to make for that day and come back the next day to trade. There are lots of opportunities everywhere. There's some of the times I see a trade play out for me 2 times. It was just of a recent 2 years ago maturity came up to play, because before now I used to trade a lot. What I mean by trade a lot, I get burnt out. I get in and get out and get in and get out, like kind of escaping, and escaping doesn't work for me. Doesn't work for me. So you have to stick to what works for you. And the next one is anger, fear of revenge trade. That is one of the disastrous stuff. You lost money. Instead of you coming down, you try to come in again to regain the money you lost. Or trying to expand your risk. Trying to expand your risk because you want to cover a loss. That's not it. Remember what I said from the beginning of this video? I said when I open a trade and the market go against me, I try to reduce the trade. That Martinga strategy of opening a trade and the market is at loss, you try to open more trade with the hope that the market will move in your favor and everything will be in profit. That's the wrong stuff. That is very, very, very crazy. Okay, now for traders, we like to keep it real. Okay, now let me quickly say this. The quickest way to manage your psychology is this: those things that you know are what will make you money, but those things that you don't actually know is what will lose you money. I learned it from Rich Dad Poor Dad, the book I've been reading by Robert. So what I would say is the ones that you have seen played out, those are your strategies. So when you see them happen in the market, trade it again. That's what I was trying to tell my mentees. I said when you place a trade and the market move in your favor, don't just get excited. Don't just get excited and get confused. What you should be doing is look for an opportunity. Now see this trade on my screen. I placed it and the market actually moved in my favor at a certain point and I was getting 2 times of my risk. But it actually reversed. Why did it reverse? The market was actually bearish. But the actually market was actually bullish, but I was trying to trade the counter trend. Counter trend hardly worked for me because my strategy that I told myself was I was going to be trading with the trend. Okay, so when the trade failed out, I wasn't angry, I wasn't pissed off. I knew my strategy was trend trading strategy. So what I did was I looked for more opportunities and I got one. I recovered from my loss. It was just a lower risk. So now let me tell you a secret that pro traders do. Nobody might tell you this, but I think I should tell you. Now, when we see a strategy that is our strategy, now what do we mean by experience? Experience is those things we have seen happen in the market and we have witnessed it, we have seen it happen. Those are our experiences, and mostly when we have traded them. What we do is when we see them happen in the future, we trade our risk according to our risk appetite. What's risk appetite? What I'm willing to lose. But when we see a strategy that we feel, take note of the word feel, we feel that this one will work out. We have not seen it happen before, but based on the way the thing is moving, it's like it will work out. What we do is we reduce our risk. Some of the time we use 0.01. Now, that I will be calling it a demo trading because why are we using 0.01? It's because we want to watch how the market moves out. Why am I using 0.01? I want to get my emotions involved so that we'll see how this thing plays out. If it doesn't play out fine, some of the times I'm not even cared. I don't even care. Those ones I played it, place a trade. Now I love what I'm doing. Okay, what I'm doing is what I'm teaching you is what actually I'm doing. I placed a trade some time ago, and for 2-3 days the trade was running. Can you believe that I actually forgot that I placed a trade? The market has long hit my TP and was already consolidating after hitting my TP. I forgot. It was when I came to the market, it was like, okay, let me see if there's another opportunity. That was when I got to find out that I actually placed a trade some time ago. Now, the reason why your emotions is getting involved in your trading is because you don't calculate what you're risking. You don't tell yourself what you're willing to risk. The thing is small losses to big wins. That's it. When we place a trade with a small amount of money to get 5 times of that money, that's how we keep growing until you grow your account 10 times of what you would actually had as a capital. You can now increase your risk a little bit. That is how we keep growing over that. See, it is not how much you make, it is how long you stay in the game. Okay, it's not a reason of how much you make, it is a reason of how long you stay in the game. Okay, and your risk is what will determine how long you stay. And your risk, don't forget, it is tied to your emotion. Okay, I think I've said a lot in this video. If you like the video and you like to see more of this video, give a thumbs up, leave a comment, and also subscribe to this channel. So until I see you again.